Next is inventory. So this will not relate to everyone. I mean, if you are someone that is in a service industry, like myself, I don't have inventory, but a lot of people, I have a lot of crafters. They have one person that makes beautiful jewelry, just beautiful jewelry. I wish I could buy everything she ever made. But she has a huge inventory for making the items. So you have to track your inventory. So if you receive and hold any product for resale, you have to track your inventory and the cost for the inventory. When you sell that, then you can write off the cost for the products sold. You write these off when sold. You do not deduct any personal use items. If you're selling a product that you use, you can't add that to your sale price. Okay? Giveaways or free products are written off as gifts. And if you want to write that off, you have to keep the value of the gift at $25 or less for each family. Now, these numbers go on your tax return, and the inventory left is added to your income. That was a lot of words, very specific. Let's go to the next slide and talk about what in the world did she just say. All right, so we're going to track our inventory. Here's an item. Let's see, we bought a red shirt and a blue shirt, okay? And they actually cost us $15 each. That's how much we're buying them for wholesale. I'm going to sell them for $30 each. I purchased 20 red shirts. At the end of the year, I sold 8. I have 11 remaining. Well, lady, do you not know your math? Actually, yes, I do. Look at the very end. Personal usage. Here's your personal usage. Yes, I had one shirt that I went ahead and took because I was doing this, as personal usage. In your case, if you gave it to, let's say you had a son or a daughter and you did the shirt for them, in that case, that might be a personal usage shirt. You could almost use it also as a marketing or inventory if you're trying to sell your product out. I mean, you can always be legally innovative. That's all okay here. But all that verbiage I just said, I wanted you to actually see it. So you pay $15, you're going to sell it for $30. You actually purchased a total of 20. Through the year, before the end of the year, you sold 8 of these. So your remaining units you have is 11 because you actually had one for personal usage. You actually paid $300. Your remaining inventory is 180. Your gross sales are 240. This is the type of thing that you'll actually type into that you'll give to your tax person, to your professional who's doing this, or that you will be putting in your tax return. Because if you note, just because you spent your total cost of $450, you don't get to just deduct all of that off. You have to take out the remaining inventory. So your gross sales are 390. You don't get to you have to deduct your remaining inventory from your total cost, which is going to reduce your costs. It's going to up your taxable income. All right, we have a home office. It doesn't seem like it would be that complicated, does it? It's a home office, but this is very specific as well. And a hot topic, a lot of people, in fact, I would say this is one of the #1 comments that I get. Should I really do a home office? Because, I mean, that's an audit topic. That's an audit red button. It has been in the past. It has been. That's true. Home offices have been a hot topic for an audit. Yes, that's true. So here's what you need to go through. Do you have a designated space for your business? And how big is it? So a designated space does not mean I'm going to use my breakfast table and I'm going to set up my computer there, and all except Thanksgiving and Christmas, when people come over, or maybe an occasional birthday, I'll clean it off. And other than that, this is specifically for my business. Nope. Mm-mm. I'm talking about that table doesn't get used for anything anymore except business. We're not cleaning it off to have a meal or to have a Thanksgiving dinner or to have a Christmas anything. That is a designated space. Now, how big is it? That's a very important thing as well, because they have this new simplified method. So that's the next question. Are you going to take a simplified method or an actual expense method? Well, let's talk about what that means, and then I'm going to give you a professional and personal recommendation. So the simplified method is called a Safe Harbor Home Office Simplified Method. And the simplified method is simply an alternative to the calculation, allocation, and substantiation of actual expenses. In most cases, you're going to figure your deduction by multiplying $5 by the area of your home used for a qualified business use. The area you use to figure the deduction is limited to $300. So how much money is that, people? Woo, come on, 300 times the 5, $1,500 is how much you're going to use to figure the amount of the deduction that comes off your gross profit, okay? Or your net profit, You cannot do negative income. So let's say that you've put all of your income in of your actual sales, because remember, you do not do your personal investment as income. So you've made $10,000 worth of sales. You have $1,500 worth of business deductions. You're down to basically you have a $5,000 profit once you have everything done. Okay. So now what do we want to use? Well, if you have a $5,000 profit, you can deduct $1,500 off and you don't have to keep up with a receipt. All you have to do is make sure you have a designated space that is 300 square feet or more for that full 1,500. Now, if you have 100 square feet because you're just, using a 10 by 10 bedroom, that's okay too. I mean, you'll take that deduction as well. The key is just knowing that you do not have to keep up with anything and you do not have to take the value of your home. So here is specifically when you're looking at what you want to do to figure your deduction for the business use using the simplified method, you're going to need to know the following information. What is the allowable area of your home used in conducting the business? Now, here's something key to think of as well. So let's say you're constructing something. And let's say that you have a little 10 by 10 room, a 10 by 10 bedroom, and that's your office. And then you have a portion of your garage and you have cut it off because that's where you're going to be storing your inventory. You're able to deduct up to that 300 square feet, even though it's in two different areas because it's specifically for your business. But what if you didn't start the business until July? Then if you conduct the business for the entire year in the home or the area changed during the year, you're going to have to know the allowable area you used and the number of days you conducted the business for each month. And either you're going to need to do the math or you're going to give those numbers to the person doing your return so that they can do the math. The gross income from the business use of your home is needed and the amount of business expenses that are not related to the use of your home. And again, you cannot take this as a loss for this deduction, but this can help get you, this can reduce your taxable income by $1,500 off the bat without having to have any receipts. I suggest to my clients to take a picture of your office that's set up or a picture of the area of the garage that you're using for storage, and do not exaggerate the number. So now that's the simplified safe harbor method we just talked about. Now what's the actual expense method? If you use the actual expense method, here's where it is very important to understand. You are required to depreciate the value of your home. You do keep up with receipts, You do have to figure that number back in if you sell your personal residence. So for receipts, if you're going to plan on deducting actual expenses, you have to keep detailed records on all of the business expenses that you think you're going to deduct, such as receipts for, if you got like a new fax machine, or you had to get some new outlets for your office space because you didn't have enough because you had equipment and things that you were plugging in. You're going to have to keep up with that, the repairs and maintenance, electricity bills, utility bills. If you've ever audited by the Internal Revenue Service, you need to have this ready, and you need to be prepared to back up all of your claims. Now, in saying that, just saying if you're ever audited by the IRS, you need to be ready to back up. That does cause anxiety, doesn't it? But just keep up with it. I mean, don't let the fear of an audit keep you from taking a home office deduction if under the actual expense, if that's going to cause you greater savings and that's what you need. If that's your circumstance, then take it. I mean, I'm just showing you how to be legal in doing it. Remember this, though. If you're required to depreciate the value of your home, what does that mean? What in the world does depreciate mean? So let's say that you spent $100,000 for your house, and you have a portion of your house. Let's say that we have 10% of the home is used for your business. Then that means 10% of the property, you're going to deduct every year a small portion of the value of your home as a deduction. In addition to that, you're also going to put your electric bills, your utility bills, any repairs that you've done to that portion of your home. So automatically, if you think through this logically, that's a larger deduction. Okay, that is. It's a larger deduction than $1,500 in most cases. But what does that mean? So let's look at what that home sells. If you're a homeowner and you take the home office deduction using the actual expense method, it could cancel out your ability to avoid a capital gains tax when selling your primary residence. So people that sell your primary residence after having lived in it for at least 2 of 5 years before the sale, you honestly don't have to pay taxes on up to $250,000 in profit, or for married filing joint, $500,000. Now, this is current tax code. It's been this way for several years, not forever by all means, but for several years. There's been no talk of taking this away anytime soon. So let's go back to the fact that we said 10% of your home you want to you're going to take a deduction every year. Well, that meant if you sold that home, let's say you paid $100,000 for it, and you sold the home for $200,000, then that would have been $100,000 of profit, and you don't have to pay taxes on that $100,000, except you used a portion of it on your taxes as a write-off. So you do have to pay capital gains on $10,000 of it. Okay, so that's how that works, that actual expense method. And it may be that you made that much of a profit that, I don't care if I have to pay capital gains on, $10,000 of it, because I saved so much more through the years by doing that. It's just something to understand. That's the whole purpose of this, and to know I do have some options. Home office isn't as easy as just saying, yep, I got a home office. It's a little more complicated, and you do have to sit down and figure out what you really want to do and go from there. All right, now let's talk about secure payment methods for income. All right, so we're going back to income just briefly because what we did was we focused on income versus expenses, and then we talked about some of the main expense types and some of the things that you have to really think about on how you're going to spend your money. I mean, when you hear home office, it doesn't seem like it would be that complicated, but you do need to think through it. When you hear startup costs, you do need to know exactly what that means and when the cutoff is. These are first year expenses. things like postage and office supplies and things like that, they're pretty straightforward. So it's not too difficult to figure out where to categorize those and how to keep up with it. So I wanted to make sure that the items that needed some additional explaining on expenses and what the government requires you to do were outlined here for you. Now, let's go back to income and let's just touch on it just for a moment. So what are some secure payment methods for income? Now we're definitely in a day of, I rarely see cash payments. I would say not even 5% of my, not even 5% of my clients will pay me in cash. As a general rule, most everybody wants to give you a credit card to pay, or just transfer it over. So what I did here was, again, this is not promoting any one company or one individual. This is just, this is simply an incomplete list of options that are out there. And the source that was noted on this site, they simply did like a private study, and they showed these particular companies as some of the top 2020 sources for income. And because I had seen several of these in my experience, I felt comfortable with also listing them as well. So here are some of the more secure methods of payment. The next slide is going to talk to you about what to consider with secure payments. Every one of these companies, just like you're going into business, their business in this case would have been to provide a service to you. They're going to be the intermediary person. They're going to take the payment, they're going to direct it to your business account, and then they're going to provide you with services. All right. So what do you need to consider when you're choosing someone? Well, are their fees transparent? How do they charge you? Are there monthly fees or monthly minimums? Do you have to sign a contract? Do you have to buy their equipment? Because the answer is, for certain one of these, the answer is yes. Sometimes if you go through your bank, they're going to be very secured, but you have to have an upfront cost for a credit card machine and for them processing things. If you go through these others, they'll send you reports. And as I stated in the last session, the sales tax, like a lot of times if you're doing a sales of a product and you're required to do sales tax, these will keep up with your the tax that you owe and make sure that you'll know when you do your reports how to pay them and what they're owed. Now, it's important to note that if you process less than $3,000 a month, sometimes you can just do a little mobile credit card processing app. The top picks for your type of product, Square, if anybody's been to any sort of anything as far as a craft or a show or anything, most of the time people will have a Square or a PayPal. Square's best with an Apple product, PayPal's best with an Android product, SumUp is best with Apple, and apparently Shopify can go either way. So that's just some tidbits of information for you to know on secure payment methods. So you've been paid, you've taken your expenses, and now we have a profit. When I talk about profit, I'm talking about your net profit, okay? If you make $10,000 and you spend $5,000 in order to make that product and ship it out, etc., your net profit that you have in the bank to spend for yourself would be $5,000, okay? So you have to pay taxes on that profit, on that net profit. And you have to pay self-employment taxes. And these self-employment taxes are Social Security and Medicare taxes. The percentage can change. Currently, the percentages are 12.4% for Social Security and 2.9% for Medicare. If you add those up, that's 15.3% of a total. That's on the first 137,700 in tax year 2020, and as you see, it did rise in 2021, which we're currently in, although the taxes that you will be doing for now would be for 2020. How much do you need to save? Well, the short answer is it depends on your household income. This is going to be based on the lowest tax bracket, what I gave you up here as an example, without knowing what your tax bracket is. You need to remember that no matter what you make on your net profit, currently that 15.3% self-employment taxes, that's consistent. The number that's going to change is that 10% federal income taxes and that 3% state. The state could go up to 5% and the federal could go up to as much as 37%. For anyone watching this, if you're in the 37% tax bracket, you're not going to be a single member LLC, okay? As a general recommendation, personally and professionally, I recommend that once you reach the 22% tax bracket of income, it's actually time to look into some other tax advantages with your LLC and no longer being like a single member Schedule C entity. So for general purposes and easier rounding, for every $100 of profit you make, then you need to make sure that you have saved $29 for taxes. How are you supposed to pay these taxes that they want? Well, you're going to pay them quarterly. So every 3 months, you are going to need to pay taxes in. They're due April 15th, June 15th, September 15th, January 15th. The 15th is the main day here, every 3 months. Also, to remember how we talked about, I said you needed to keep up with all of this monthly. So if you keep up with all of your books monthly and you know how much expenses and profit that you have, then you add those 3 months up together, you're going to know how much taxes you owe. If you owe $1,000 or more, then if you don't pay estimated taxes and you end up owing $1,000 or more on your taxes, you will get hit with what's called an estimated tax penalty. They want you to pay the estimated taxes. How are you supposed to pay these? Well, there's 4 ways to do it. On the right-hand side of your screen, you'll see an actual voucher. It's pretty simple, really. You're just putting your name, your social, your address, and then the dollars amount is how much you're going to pay them. So just make sure that you know they're not asking for you to give them how much income you've made here. That's not the purpose of this. It's just they want to know how many dollars are you sending us, because we want our money, all right? You can pay them online through irs.gov/payments. You can mail it in. You can pay them by phone, or you can pay by cash. Currently, if you were going to pay by cash, you'd have to go in person. I don't think this option is available currently during the COVID pandemic, but at some point that will be back available. If you pay by phone, you do have to pay a processing fee up front while you're on the phone with them. So, my suggestion is one of the top 3, because the 4th option currently during COVID is not available. All right, so we have made us some money. We have paid and saved for our taxes, and we know how much we need to do. And we are going to make sure that we have marketed so that we can make as much money as possible. And for our marketing, I just wanted to do a reminder. Here are the basics. Make sure that you have set up your business email. You have set up a business website. You have a social media presence. Offline promotion is just as important, okay? And that kind of goes along with networking. You've talked to people who are out there who you can sell to. You've talked to professionals that can give you some feedback. You know where to go, where to get your stuff, and how to get the word out. Now, we've also talked about how to keep up with your numbers. What kind of home office you may or may not want. why you want to make those choices, how there's no magic number for business mileage except for whatever you actually drove for business. Top reasons for an audit: a simple math error. If you don't report income. Now, how are they going to know if you don't report income? If you provide your information to a business, because, oh, here's a great one. Let's say that you do a small business through a company that's kind of well known. Sometimes if you make above a certain amount of sales per year through someone like an Avon, a Mary Kay, a Norwex, any of those Tupperware, they'll send you what's called a 1099 as a non-employee compensation. If they send you a 1099 with a non-employee compensation because you hit some sort of mark that they need to send you one, and you don't put on your tax return that they sent you one and link it with them, you will get a letter saying you did not report this income. And you'll be like, but I did. I put the total amount and I just included it. If you made $5,000 and they sent you a 1099 for $1,000, and you're like, but I included the 5,000 as the total number. No, you have to do 4,000 from your business checking, and then you have to put the 1099 in to show that the additional money is accounted for. Because you know that business identification number that you did? You know how I told you previously, if it's $600 or more, that you legally are supposed to send people a 1099? Well, guess what? When the government gets that, they're going to expect, did you report on it? So there's a great example of not reporting income. Maybe you did report it, but you didn't report it properly. Okay? Do not claim too many charitable donations. Too many losses on a Schedule C. I mean, that I explained that in the first session on, so many people through the years, they're like, I'll just start this little side business and I'll just reduce my taxable income by showing a loss, and then I won't owe as many taxes. Not working. Okay, not a good idea. That's another thing, is deducting too many business expenses. Claiming a home office in the past and currently can be a reason for an audit. But if you hit the I want to do the simplified method safe harbor, then they are not auditing those. And then using round numbers. I drove 50,000 miles, or I spent $150 on postage, $200 on office supplies. I drove 50,000 miles. Oh, I better put a 5 in there. I'd spent $25 on advertising. No, they're going to know all you did was make something up. The computer is going to look at that. You better be adding the numbers and writing it down. Too many zeros and too many 5s and too many round numbers. I mean, let's face it, you probably are doing something that you're not supposed to do if that's what your tax return shows. So, anybody in the world would want to talk about stress management after just talking about top reasons for an audit. One of the last components of having a business, honestly, is stress management. You have to make time management your top daily priority. You can't waste time with indecisions. I think I should do this. Maybe I should do that. I'll think about that tomorrow. No. We may be in the South, but we are not I'll think about that another day. Okay? We have to think about it now. Lists are your friend. You hear? Lists are your friend. What does that mean? Make a list of all the things that need to be done. And then prioritize your list on what needs to be done first, second, and third in order to accomplish whatever goals you have. And remember, successful self-employed people will work harder for yourself than you ever did for an employer. This makes you much more vulnerable to overwork, and its consequences can be burnout. So you do have to carve out some regular time for self-care. Daily, you need to keep it simple. Take breaks during the day to stretch. Don't skip breakfast. Take a lunch. Make sure you're getting some sleep. And sometimes you actually will have to put that on your checklist. Just had this conversation yesterday. You didn't get up to take a lunch break. You just sat there all day. But I had so many people calling me and I needed to get back with them. Remember, if you don't take care of yourself and your brain and your body, nobody else is going to do it for you. Carve out when you're going to work your work catch-up day. Now, that may sound kind of odd, but it's really not. This is such a great, great advice piece. Every month, when are you going to go over those receipts? What day is it going to be? When are you not going to take any phone calls because you are working on those books or getting everything organized? And what regular day is it going to be? Also, when are you going to dedicate a family day? Now, why are you putting this on stress management? And why are you putting this on time management? Because typically people are doing self-employed so that they have more ability to enjoy life and enjoy their family and enjoy things they want to do. Put it on the calendar and go ahead annually and plan those family and friend vacations, because these are times to look forward to, and don't skip them. Just like don't skip lunch, don't skip those either. So we also have to take steps to how to identify to deal with your finances. This is a huge stress relief. You've got to follow up on your invoices. Well, I know that they owe me, but I don't know. No, stay on top of your accounting. Are you following your business plan? Are you meeting the mission of your company? Okay? Are you doing this? Follow all of these stress management techniques, and then you can fend off so many common pitfalls experienced by self-employment workers. Okay? As a result, you will have more time, more energy, and more resources left at the end of the day to truly enjoy the benefits of being your own boss. If it's more stressful and more headache than not, you're not going to stick with it. So now let's just take a breath. It's a whole lot of information. It may seem a little overwhelming, but remember, all of these slides are there. All you have to do is print them out. Make a note. There's no guesswork. Where am I supposed to go? What did she say? Look, it is not that's an extravagant slideshow. It's extravagant because it gives you the good information that you need in order to have a successful business. You know where to go. You know what to do. You know how to do it. So where do you start? You start with printing out all of these slides. You start with figuring out what step one is, and you don't even have to guess what it is. It's right there for you. And we hope that you are taking time to successfully set yourself up, that you also have time to do your stress management techniques. So let's practice at the very last. Let's just take a good breath. And that's a wrap. Thank you so much.